Everyone, JJ here. Thanks so much for liking these videos and subscribing to our channel. Really appreciate the support as we grow this channel and continue to produce high quality content for you. Definitely appreciate it. And if you feel like these videos are helpful, it'd be great if you'd be able to share these with others as well. Thanks so much. Okay, so getting right into it, we had an absolute bloodbath in markets yesterday. Dow was down about 650 points. All of the major indices were lower. We're not having a lot of indications that this morning is a recovery day. Looks more to be a flat kind of day. So what was going on yesterday? We had fiscal stimulus discussions come to another halt. Nancy Pelosi, Steve Mnuchin, Mark Meadows in the White House, they're at another impasse on a number of matters, continued disagreements on state aid, additional disagreements on COVID testing and tracing. It doesn't look like we're going to see any stimulus before Election Day on November 3rd. So that's unfortunate. However, if there is stimulus to come, which we are still optimistic that we will see some stimulus in the lame duck session between November 3rd and January 20th, whether it be Donald Trump that gets reelected or Joe Biden that gets elected. We're likely to see some stimulus over the next couple of months, but it's not coming in the next couple of weeks. All right, so markets were not happy with that. They also weren't happy that COVID cases are rising locally on a national level in the United States, as well as across the globe. So an increase in COVID cases means the potential for more shutdowns for businesses or increased regulations. So unfortunately, markets were reacting to that as well. Next, we've got a contentious election. So we're just about a week out now from the election. And when I look at the betting markets on predictit.org, which is a nonprofit where you can actually make for-profit bets. It's a retail market. The maximum bet on there is $850 per contract. So for instance, if you were to bet on Donald Trump or Joe Biden to win the election, what are the current odds? They're roughly 60-40. So 60% Joe Biden, 40% Donald Trump. Those are the true betting odds. People are putting real money on that. So when I'm looking at these betting odds and comparing them to 2016, Donald Trump upset Hillary Clinton when he was going into the election as a 5-1 underdog day of the election. So you have to take some of these polls, some of these betting odds with a little bit of a grain of salt, although the big takeaway here is this is going to be a close election. When we're tracking the battleground states like Pennsylvania, like Michigan, like New Hampshire, like Ohio, like Iowa, all of these close states that really each candidate is vying for the delegates from those states, this is where the election is going to be won or lost. If we flash back to 2016, the delegate count that Donald Trump won by was a fairly wide margin. However, he lost the popular vote to Hillary Clinton by over 2 points. Okay, so Electoral College getting to 270 is what's going to win the election. The uncertainty of who is going to win is creating some gyrations and volatility in markets. Now, the worst case scenario that I could see is a contested election. And a contested election would be, let's say Pennsylvania is won by less than 10,000 votes, and the candidates ask for a recount. And if that happens for multiple states, multiple battlegrounds that are going to decide the election, we might not have election results by November 4th. And if we don't have election results by November 4th, the markets are not going to like uncertainty. Now, I'm going to caution, talking a lot about the short term. If you have a long-term investment portfolio, if you're 20 years old and you've got an IRA or a 401k, you're probably not going to be touching that money for 40 years. So these short-term gyrations caused by election and volatility aren't something you need to really worry about today, right? But when I'm talking to you more about the opportunities in the short run, or if you have a risk portfolio where you're buying some individual equities or speculating a little bit, let's talk a little bit more about what we see in the short run. So outside of getting invested and staying invested in the long term for long-term portfolios, in the short run, there's a number of tactical positioning pieces that we've talked about, such as a potential of a retail recovery in 2021. I talked about a couple of companies that could be well positioned, like Simon Property Group, which is a real estate investment trust, as well as Nordstrom, which is a beaten down retailer that now has less competition with the bankruptcy of JCPenney, with the bankruptcy of Lord & Taylor, with their increased digital presence, with their buildup of inventory for the Q4 season. They've got a lot invested in the end of this year, Christmas season, as well as potential for a 2021 recovery. So if you believe in the tailwinds of vaccine, phase 3 trial, we talked about Moderna, there are others like Pfizer, like Johnson & Johnson, that are getting very close, and a real probability that we see a vaccine before the end of the year that gets approved and or early next year. That'll be a big tailwind for the retail sector and also likely a big tailwind for markets. In addition to vaccine, also earnings recoveries. We're expecting that companies in certain sectors are likely to do a lot better in 2021 than they did in 2020, and it's likely that's going to reflect in price. Okay, so I'm going to talk lastly about a couple of deals that are still taking place. In particular, one that was just announced yesterday, private equity firm Inspiration Brands, which is the owner of Jimmy John's, Arby's, and a number of large restaurant groups. They are the likely private equity buyer of Dunkin' Donuts. So in a day where everything was red, you saw Dunkin' Donuts shoot up, and you may have thought, why is Dunkin' Donuts going up? What's going on? Well, Inspiration Brands is going to be putting out a bid to take Dunkin' Donuts private. So what they're going to be doing is paying shareholders a higher dollar value than it was the day before for them to close a deal and take this company private. So they will no longer be a public company. So despite everything that's going on in the broader economy, there are still private equity groups, there are still institutional firms that have a lot of cash that they want to put to work, and I wouldn't be surprised to see more deals similar to what happened with Dunkin' Donuts, especially for those that are undervalued. So we'll talk more about that. Really appreciate you guys liking this video. Hit the subscribe button if this was helpful. Have a great trading day.